How do I know I've got a good deal on finance? Hi, I'm Kelly Bowen from Lifestyle Finance Australia, and today I'm going to have a little chat with you about how you know whether you're getting a good deal with finance. It's something I get asked a lot on a day-to-day basis, and I guess my answer is a little bit, how long's a piece of string? Depends upon what you're financing. So let's start with the basics. So depending upon how you're choosing to do your finance will depend upon the sorts of fees inside your loan. So if you're choosing to do your own finance, you're most likely going to have lower fees because you won't have any origination fees or any dealer fees from brokers or from somebody who's organized it on your behalf. And yes, you can save money there. However, you're on your own. You're dealing with banks by yourself. You're dealing with any anomalies on your bank statements or on your credit files by yourself. And to be honest with you, have been in the game for as long as I have now, saving yourself a few $100s on an origination fee or a dealer fee, it's just not worth it. So if you see an origination fee or a dealer fee within your finance fees, this is pretty standard, and provided the person that's been working with you, who's been helping you get the finance, then, you know, truly, they really are worth their money. Brokers and dealers work really hard for you to get you what you want so that you can have your dream now. Second to that, the other thing that you need to consider when you're looking at finance to know whether you've got a good deal or not is the kind of rate that you're getting. And this will widely vary depending upon what it is that you're financing. So let's start with the basics. If you're looking at a home loan, because typically when people think interest rates, they naturally organically compare it to, well, you know, my home loan's this, why is my personal loan and my credit card so expensive? So here's what you need to understand about rates. If you're looking at a home loan, today's market, what's really good is anywhere between like the 2 to 3%. I think I heard somewhere that I heard a 1.9, but again, I haven't seen it on paper, just heard about it, could be a mythical unicorn, but typically when you're looking at home residential mortgages, it's going to be somewhere around the 2 to 3%. When you're going into commercial finance, being commercial property, and you've got investment properties, that's going to be a little bit higher. I think the going rate's somewhere around 3%, 4%, somewhere in there. It's not typically my areas of expertise. I specialize more in the asset side of finance. As you'll see when we step into this place, I can be really clear with that with you in terms of what you're looking for. Now, next, in terms of the rate risk scale, then we go to cars. And the reason why cars kind of fall into the second cheapest thing to finance is because simply with homes, people need a place to live. They're not going to default on it. They're going to prioritize that repayment. Cars are very similar. Cars are low risk to banks to finance because, you know, let's be honest, we need to get from A to B. We're not going to default on our car payments because if we do, it means that the bank can take it back. So if you're looking at a good car deal, again, depending upon what your profile is, this could vary anywhere between high 4% to 7.9s. And again, this depends upon whether the car's new, used, whether you're asset backed, meaning that you have a mortgage, or whether you're renting or boarding. It can vary, but typically speaking, expect it to fall somewhere between that high 4s to potentially high 7s, maybe 8.9s, and if you're within that scope, you've got a pretty good deal. Then the next thing to come after that, after cars, is your leisure assets. Now, leisure is considered bikes. When I say bikes, I mean motorbikes. You've got boats, jet skis, caravans, this kind of thing. Now, again, if you're asset backed, you're really stable, you've been in the same job for 3 years or more, you're going to land on the lower end of this risk scale. But if you're renting, you've changed jobs a bit recently, that's going to be a little bit higher end. And when you're looking at leisure assets, these are starting to go into higher risk category because when people come into financial struggle, the first thing they're going to default on is their leisure assets. Or they'll foreclose on them, or you're looking at credit cards and personal loans because the rates are high and they're also not necessity. So these will fall anywhere between 6 to 13%. And then on the high end of this risk scale, when you're looking at personal loans and credit cards, this is money the bank is giving away with no security to them. So if you don't make your repayments, they've got no way of recovering that money unless they send it to a debt collector. They don't have a car or a boat or a house they can take back and try and sell it and make some money back on it that way for their losses. They're literally giving out money at a high risk, which is why their rates reflect that. So if you're looking at a personal loan in today's market, gosh, and this is sort of the area that we specialize in, but some of them we've been writing for at like 6.49%, which is unheard of. And then you've also got, depending upon where you fit, that could go anywhere up to 19%. However, again, like when you're looking at getting access to funds and, you know, very low risk for you, high risk for the bank, it's really not, you know, that big a deal. And then you've got credit cards, and this is like money for murder. Credit cards, you're looking into the 20-something%. So you can find credit cards that have some really great deals on it where you'll get a 6-month interest-free period, which is great because as long as you pay it off within that 6 months, it hasn't cost you anything to have the purchase. Others will have some lower rates. You might be able to find them out there floating around at, you know, maybe the 10%, but typically speaking, if you can, great, that's an awesome credit card, but typically speaking, they're going to be into your 20-something%. So when you're looking at financing, if you're sort of playing within that scale and what you're purchasing, depending upon the type of loan that you're getting is falling within that category, you've got a really good deal. And of course, if you're unsure, feel free to get in contact. We specialize in this stuff. We deal with it day to day. We know how to get you the best deal. We know who's going to give you the cheapest money for what it is that you want to buy. Is what we love doing. We love finding the right fit for you. So please either click the link below, send us a private message, and we'd be more than happy to help you with this. Hope you found value. Thanks.